Back with first trades right here on ET now. Well, of course, the first trades are getting, sharply lower right now. We're down about 270 points. Some of the key heavyweight names like Tata Steel are bleeding about 5.25%. iShares is down 3%. And look at SBI and the kind of contribution it's had to the drag on the index today. That's down nearly 3% as we speak right now. Maruti, Interglobe Aviation, BEL. There's Eternal, which is down almost 2.7% as we speak right now. Most of these stocks are the ones which are weighing quite heavy on the indexes. L&T, Reliance Industries, just a handful of movers, and that's largely from within the IT space. Coal India and Bharti are a little bit resilient. Of course, there's Premier Energies and Uno Minda as well from the midcap pool, which are holding out and reacting to their earnings. But other than that, look at an Amber, look at an ICICI Pru Life, PG Electroplast, Cochin Shipyard. These are all rank underperformers. In fact, Amber is now down 14% in F&O. And that's quite a bit of weakness trickling in on that stock. In fact, we should have that soundbite ready as well. The management just held their conference call as well. We'll play that out for you in just a second. But let me now welcome on board Santosh Kumar Yadav from KRN Heat Exchanger and Refrigeration joining in on the show right now. Santosh, great to have you today on ET Now. Morning, firstly. And it's been a very strong Q4 for you. Let's start by talking about margins. Your margins spiked, but there was some pressure on a sequential basis. Year on year, of course, they look quite okay. Tell me what's the reason behind that? And is it the spike seen in copper prices? And what's a sustainable level for FY27?
Yeah, Isa, good morning. So basically our margins, I think mainly we achieved from data center billings, because data center, our quiet margin is up compared to our normal business. And secondly, we achieved export side is also good. So slightly our margin is up also in export side business. And secondly, you can say slightly we have some inventory gain as well. So if you combine these three things, so that is the base of the margin up.
Santosh, what is the kind of order book you're sitting on? And because your exports are now around 16, 17, 16.5%, 17%, and majorly going into UAE as well. Have you seen some disruptions there?
No, for us, I think first time since we started business, so we have first time order booking for export is quite good, because last year we achieved around 100 crore of total export, but this year our opening order is around 120 crore. Especially from North America and of course UAE and Europe. So you can see we have almost 120 crores. So that's why we are saying this year we are going to achieve around a double export compared to last year. And other order for domestic side, we have a good order from data center industries. So there is, you can say opening is not in term of value, but we have rolling order month on month basis from our existing customer.
And how is the raw material prices impacting you? Are you hedged for the raw material prices?
No, for us, we pass to for copper LME, aluminum LE, and USD to INR, all three things to our customer quarter on quarter basis. So if some hit we have on only one quarter, but we always keep inventory around 2.5 months. So for us, I think we able to pass 100% our these metal prices to our customer, because we have price contract such way.
What about the capacity additions that you are planning? Because your data center business is taking a big, mix of your revenue now. How is the ramp up that you see for your entire capacity addition now at this point in time? And how is the utilization of the capacity as well?
So capacity, we only added around 6x compared to our old facility. So that facility is now ramping up quarter on quarter basis. You will see the ramping up in good way. And this is now we already shifted our new facility in new office as well. And like this year, we are planning to achieve around 50% of utilization from our new facility.
Are you seeing increased demand for HVAC, given the fact that you have an El Nino and early summers coming in? Has that increased the demand for your products by a significant amount?
No, like room AC, we are not good in, because we have almost zero percentage revenue from room air conditioning. But the commercial side, of course, demand is there, especially data center demand is there. Refrigeration side demand is there, and export side demand is there. Other than also we added a new product as well, like bar and plate heat exchanger, bus air conditioning, complete HVAC system, and then refrigerator component. So there is still demand is there.
Talk to us about the new opportunities that you have. You have the bus ACs and the railways HVAC opportunity which is coming in. How big is it for you?
So first step, we have to supply like 500 bus air conditioning to OEM. So that we, I think, already achieved. So now we will start development for HVAC for railway business. So it will take around 8 to 9 months from now. So this running financially, I think we will not have much revenue from Indian Railway for complete HVAC, but next year we will have some revenue from railway.
Have you already got the orders from railways, or you will be pitching for those orders?
No, we will start development. So there is 8 to 9 months of the vendor approvals and process quality from railways. So it will take time around 8 to 9 months from now. But we already had that team, so they will join soon, and then we will start the development.
The PLI and RIPS approvals are expected in FY27. What could be the potential financial or margin benefits once the approval comes through?
So PLI, we will have already approval. So this year we will receive around 5% of the fin and tube type heat exchanger top line revenue. So it should be around 20 to 25 crore, I think you can say in numbers. And RIPS, we are supposed to receive very soon, I think in coming week or maybe coming next week. From now, maximum you can consider 2 weeks only. And then we can have 1.5% of the top line once we receive the approvals.
The other thing I also wanted to talk about, Santosh, was your Sphere refrigeration systems acquisition and how that's playing out. Has it started contributing to your top line? And what exactly is the timeline, if not yet?
No, last year we achieved around 10 crore from this business only. And now we already opened 5 to 6 service center. So now month on month basis, what we planned, so in line we are receiving the numbers. And this year our planning to achieve around 15% of market share for complete bus HVAC system. So that we will achieve.
Can you also give us a sense of the margin profile for FY27? You've been able to hold up the margin on a year-to-year basis. Is 18% the nominal level that you expect in FY27?
So I think our margin now slightly will up if we include incentive, because this year we will have PLI, we will have RIPS, and other than export we are going to double. So and bus air conditioning also we have 15% of market share. So if I club these 4 things, we will have bus AC slightly up margin, export also slightly up, then PLI and plus RIPS. Other side, we have depreciation is quite high and overhead is going to increase. So we able to increase, I think, 1.5% more what we achieving existing.
It would be around what, 19.5% for FY27?
Yeah, on existing, you can say 1 or 2% we can able to achieve more.
Give us a sense of how you're looking at the entire inventory management at this point in time, because there is a lot of supply disruptions also which is coming in, and commodity price inflation which is there. How are you managing that at this point in time?
So our main raw material is copper and aluminum. Of course, price fluctuation is quite high. So there is a challenge for industry. So we will have some domestic supplier already started their manufacturing. So we asked sample for development as a domestic vendor, so we can maybe reduce our inventory. But it's still we are unable to buy much from them. So it's still under development. But as of now, we have to import almost 100% from Vietnam, Malaysia, Thailand, or Korea, and some from China. So it's still, I think, from now 6 to 8 months, it will be a challenge to reduce the inventory. But once domestic vendor start, then I think we can able to reduce. Other than this, we are not hedging because our price contract such way we can able to pass to our customers. So we just buy on the what market is running. So that way we can able to pass to our customer.
Santosh, so good chatting with you today. Thank you so much for your time.
Thank you. Thank you.
Well, that's the word coming in from KRN Heat Exchanger. But let me focus in on Gland Pharma. That's the one which has really been spiking up after its solid performance. Merrill joins in with insights from their earnings this quarter.
Yes, Gland Pharma has seen an exceptionally strong quarter this time around. They've seen revenues up 22%, EBITDA up 47.6%. Margins have also seen an expansion, while the company's profitability has grown the largest at 96% on a year-on-year basis. Now, this has beat the street's expectations for the stock and in its fourth quarter earnings. And in terms of operational performance, the company has also seen its other income rise up to 153% on a year-on-year basis. Now, this strong performance mainly came from the company's CDMO business, contributing 46% of revenues in the fourth quarter, which grew 36% on a year-on-year basis. Geography-wise as well, the company has recorded more than strong double-digit growth in most of its geographies. India businesses especially up almost 30% on a year-on-year basis. Going forward, the company's also given very strong guidances for the coming few years. For FY27, the consolidated growth guidance for the company stands at around 12 to 13%, which is on a constant currency basis, immediately a positive. And another key aspect is that this excludes any further impact from the company's GLP-1 performance. So any strong growth on that front will only be a direct contributor to even stronger growth for the company. And this positive management guidance is what is seen to be driving the stock up today in today's trade.
Thank you, Meryl, for that update on Gland Pharma. And if you look at Gland Pharma stock, it's up nearly 12% in today's trade and trading at a PE of 36 as we speak. Coming back to some news from the from politics. The Prime Minister Modi's five-nation tour across Europe comes at a time of heightened political flux, underscoring India's push to deepen strategic and economic partnerships with key global allies. Sumita is here with the details.
Prime Minister is on a five-nation visit to deepen strategic ties across Europe. He's currently in Sweden. The Prime Minister is, of course, going to be attending a European roundtable for industry. The next countries that he's going to be visiting after Sweden include Norway and Italy. In fact, he's already visited the UAE and the Netherlands. So let's take a look at some of the key takeaways from those visits. Well, the UAE he visited on 15th May. He held talks with the UAE President Mohammed bin Zayed Al Nahyan, and a strategic accord on strategic petroleum reserve was signed, along with defense partnership that was discussed. Among several pacts that was signed, the key one was related to LPG. There was also a pact related to ship repair cluster at Vladimir, and an investment worth $5 billion in Indian infrastructure was also announced as far as these bilateral talks are concerned. The Netherlands, this was the second leg of his tour. Both the sides discussed the early signing and implementation of the India-EU FTA. Overall, there were 17 pacts that were inked in defense, critical minerals, mobility, and AI. Perhaps the most consequential one was related to the one in semiconductors, wherein Tata Electronics and ASML are going to be, they have signed an agreement on semiconductors, and ASML will enable the establishment and ramp up of Tata Electronics Solera Fab in Gujarat, and this facility will be producing chips for autos, for mobile devices, for AI, and several other sectors. Then, aside of this important and crucial pact, there was an MOU on cooperation in critical minerals. There was a lot of focus on renewable energy as well. There was a roadmap on green hydrogen cooperation that was also signed. So, of course, all eyes are now on this particular leg of the Prime Minister's visit and the important pacts that will be signed, given the fact that it is coming in even as there is immense geopolitical disruption, and of course a realignment in supply chains also is being seen.
Right, Samita, we'll leave it at that. In fact, let's get you an exclusive now. My colleague Akanksha Kumar caught up with the Commerce Minister himself, Piyush Goyal, about the widening trade deficit that is, and many other issues.
Government has hiked price import duty on gold and silver. So how would this affect jewelry industry and also the imports of?
Well, the jewelry industry largely works on the recycling of jewelry also, and I'm sure they will look at smarter ways to continue to grow their business. And as far as exporters are concerned, they are always allowed to bring in gold duty free.
So what is the status of US-India trade deal finalizing?
We have already finalized the trade deal and announced to the world. Because of the changed circumstances, we need to calibrate it so that we continue to get preferential access compared to our competitors. That process is progressing very well.
So we have seen this data just now. The trade deficit widened to 7.81 billion in April and 2.44 billion dollar in a year earlier. So given the uncertainty over West Asia war, would you...
It is a function of many factors. It varies from month to month. I don't think it has widened per se at the aggregate. Our trade deficit for last year has also been announced today. It is less than our remittances. And remittances also in a way are a part of trade, because we are encouraging more mobility, we are encouraging opportunities for Indians to work in different parts of the world. So I think on the foreign exchange front, India continues to be very strong. We have an 11-month cover on our import requirement against IMF, who says anything above 8 months is considered very good.
Okay, and on that note, we're going to wind it up right here in this edition of First Trades. It's a goodbye from Sajeev and me.
Hello and welcome. You have tuned into Midcap Masala right here on ET Now, and this is the show where we tell you all that is happening within the broader end of the market, not just tell you the big headlines of this particular hour, but also connect with the management of the buzzing counters as well. So let's get started, and firstly, let's have a look at the key headlines of the hour gone by. First up is Gland Pharma, that is seen to be jumping after strong Q4 and with record quarterly revenue. The management sees CDMO emerging as the core growth engine with revenue addition of $40 to $50 million in FY27. The stock is now up 13%. Somani Ceramics too gains after a steady Q4 with revenue growth driven by improved realizations and a recovery in volumes. Management has guided for a strong FY27, targeting 20 to 25% revenue growth with double-digit volume growth in sanitary ware driving growth. And earnings cheer continue as Godrej Industries gains after a strong Q4 with margins expanding sharply to 15.2%. Adding to the momentum, the company has approved fundraising of up to 1,500 crores through NCDs and other instruments. And Bajaj Electrical shares declined 7% on Q4 results. Revenue was seen at 1,240 crores versus 1,265 crores. That's down 2% YOY. EBITDA margins have come at 3.5% versus the street expectation of 5%. The company has reported consolidated loss of 67.5 crores versus a profit of 59 crores YOY. And Hind Rectifiers declined 12% on weak Q4 results. Revenue rose 51% YOY, but EBITDA was seen at 8.4 crores versus 19.9 crores, and that was down 58%. EBITDA margins were seen at just 3% versus 10.8% YOY. All right, so that's about the key headlines of the hour. But taking a look at the markets now, yes, of course, a day in the red because that was the global handover as well as the Asian markets were suggesting. But Nifty is now down about 260 odd points. A very mild recovery from the day's lowest point is what we are getting to see, because at one point Nifty managed to decline over 300 points. But other than that, when it comes to Nifty Bank as well, here too we are seeing a very mild recovery kicking in, but still holding on to the cuts of 840 odd point. And it's the PSU banking pack that is under tremendous pressure as we speak. India VIX too has shot up. But other than that, within the broader end of the market, let's take a look at which of the counters that are doing very well in trade today? Yes, of course, Gland Pharma is one after very strong management guidance and earnings. The stock has shot up almost 13%. But other than that, it is GE Shipping as well, because for this particular counter, there's been no stopping, an 11% jump coming in over there, and even SCI up almost 4%. Carborundum Universal is another counter that is holding on to the gains of 3%, and Select Metal Basket, even after strong set of numbers coming in from Tata Steel, SAIL, which are some of the profit booking candidates. Hindustan Copper is one such candidate that is holding on to the gains of 2.5% as we speak. But what is not doing well is, of course, Amber Enterprises. What a dismal number, 16% decline. As we speak right now, KEC, Cochin Shipyard are some of your other big losers in trade today.
All right, well, let's get going then and let's put the spotlight on Pearl Global. This company reported its fourth quarter results where revenues have risen by 7% and margins too have expanded, and they've come in at 10.2% versus 9.5% that the company reported same time last year. Remember, the entire textile basket has seen some bit of impact when it comes to tariffs. But what's the outlook for the next year? To understand that in greater detail, we are now joined by the Managing Director of Pearl Global, Pallab Banerjee, who is now joining us. Mr. Banerjee, morning. Thank you so much for joining us. Shesha this side. First up, if you can take us through what the fourth quarter looked like for you. I understand that there have been some bit of tariff impact, but despite that, numbers look strong on a year-on-year basis. Will this sustain as we head into FY27?
Yeah, good morning. So far, it looks like things are good. In terms of the order books that we have for the next quarter, that's looking reasonably well. But you know, the global situation at this point of time, there are always some surprises. So far, everything is going very well.
All right, so far things are going well. But along with that, Mr. Banerjee, help us understand that how is FY27 looking like? If you can help us with some numbers, because yes, the street has taken your quarter four earnings very positively. But the key question is that will this growth sustain in FY27? Any number that you have in mind?
Yes, what we are doing is our plan is to grow by 12 to 14% year on year as a CAGR. Definitely, that's something is the goal that we have been working upon. We have built up the capacities accordingly. And if I look at my order books and the customer interaction, it's going on track in that path.
12 to 14% growth is what you're guiding for, Mr. Banerjee. But wanted your thoughts on the impact of tariff. Is that largely behind us? And are higher exports to other countries like Bangladesh more than compensating for the impact of tariff that you have faced in the last few quarters?
Yes, like for India specifically, the tariff was very high. We had a 25% IEPA tariff that Trump administration had put on India. On top of it, there was a 25% penalty. So that was quite big for India, whereas rest of the countries like Bangladesh, Vietnam, Indonesia were working in the range of about 19 or 20% tariff. So that significantly impacted India. Most of the customers ask for some kind of discount. So they are the landed price, once they import the goods and pay the customs duty and tariff in US, the price should be comparable to the other countries. So for that, to do some business in India, it costed us some extra discounts. And that was levied on us since August end till about February, when this IEPA was declared as not legal by the Supreme Court. And yes, currently it is about 10% tariff, additional tariff over and above the MFN duties that every country is supposed to pay, or basically once the goods are imported into US, whoever is importing, that means the customers or the retailers or the brands, whoever is importing the goods, they have to pay that tariff. So yes, India was not sustainable or not feasible for these customers unless until somebody absorbed this difference. If you see for almost 30%, so that 50 versus the other countries of 20. So that something like was affecting us for these months, and we had to pay that amount of discounts. Now that every country is at 10%, so this problem is sorted out. now I think USA is doing the the bilateral trade agreement with the countries. I think Bangladesh just got signed up. Other countries are also, I think, in the process of signing up. India, they have levied, I think, 18% reciprocal tariff once this bilateral trade agreement will be signed. So that's something like, we would see. As of now, this 10% additional tariff due to Section 122, I think that's valid till July end.
All right, so that's the take coming in on tariffs. But just wanted to understand that since the war is ongoing and the cotton prices, polyester yarn and other raw material prices and even freight costs have increased sharply, what sort of an impact are you already seeing on the business and how are you mitigating that? What are your plans regarding price hike or passing on to the customers?
Yeah, so our industry normally works on, especially for US market, if I could give an example, it works on quarter. Yes, there are some business projections that is done, but the order contracts are signed every quarter. So that's how US places it. Japan would do it once in 6 months. European countries does it almost like every alternate month. So that's the kind of timeline that goes in. So any price increase of raw material or any fluctuation of currency, if that happens, so within a quarter that gets compensated. So buyer also can see, it's like today it's a transparent world. So everybody can see what's the rate of raw material, what's the rate of the currency. So these two things always get factored in as we do the costing for the next quarter or the next season, depending on which market it is. Yes, if the raw material prices have gone up, then these are passed on to the customers within that period of time.
Understood. So that's as far as raw material pricing is concerned. But Mr. Banerjee also wanted to get the sense on demand, especially to export markets. Has there been any impact of West Asia crisis? Do you export to those geographies?
So not to the West Asian countries, we are not exporting much. But so far, what we are seeing is other markets like the US market, European market have been very resilient. And we have not seen any impact due to this war. Yes, what you just said, the raw material prices are up. Energy cost is starting to going up. And so those are the kind of disturbance that we are seeing in these manufacturing countries. But generally, the consumer markets as of now has been quite resilient. If we speak of US, what we saw in 2022 when the Ukraine war just started, at that point of time, the fuel prices were in this range of what it is today. And that slowed down the market later on. But this time, what we are seeing is that that impact is not there.
All right, good to know about that. But along with that, Mr. Banerjee, you said that Guatemala break-even is actually expected at the start of FY27. What gives you confidence on this and what factors will be behind this?
So Guatemala is a very high demand kind of country for US because the goods can be shipped to US within a week and it can be in the store in a couple of weeks' time. So with that, there's a huge attraction for the US retailers and the brands to buy from Guatemala. But the manufacturing capacity is very limited and the raw material sourcing is also very, very limited. As a result, it's not an easy country to operate. And we have learned that. We have seen that, making break even, it's taking us time. And I think what we are seeing that last year we had a, sizable, what we saw is a drain. This year, I think we are almost coming to that, not yet break even, I would say. So that's give us the confidence that next year, definitely we should be crossing that mark.
Mr. Banerjee, wanted to get a sense on the FTAs that India has signed with several countries globally. Is it benefiting you? And has that already started reflecting in your numbers or it is likely to take some more time?
European Union and UK, both these FTAs are the additional FTAs that we have signed as of now, but not yet implemented. But other countries like Japan, Australia, it has been existing for some time. And So there we see that the continuous growth in interest in India. These two countries, UK and European Union, what we are seeing is they are showing interest at this point of time. Most of these customers from UK and European Union were working very heavily in Bangladesh and Cambodia, and now in Vietnam also has become for them tariff-free. So Bangladesh and Cambodia was for the LDC status, that's the least development country, developed country status that they had, because of which they were getting that benefit. So the brands and retailers have a very high exposure in these two countries. India signing this FTA is very exciting for them because India is a much more stable economy and a much larger economy to do business with. So that's a positive sign, and they are showing a lot of interest. So there are a lot of queries at this point of time. Just early confirmation is happening because they would like to go slow in the beginning just to try out. And once the implementation is done, then there should be definitely a significant growth.
All right, and we look forward to that. But with this, Mr. Banerjee, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you. Thank you so much.
All right, so that was the management of Pearl Global talking to us about the growth and the industry growth visibility going ahead. But let's shift focus to Solar Industries. The company did post a blockbuster set in Q4 and look at the performance in stock as well. It is clearly reflecting that excitement. But what's the way forward? What factors will be behind the growth going ahead? Let's understand all of that in detail. And for this, we are being joined by Mr. Manish Nawal, who's the member, executive managing director and CEO of Solar Industries, joining us on the show. Hi, very good morning, and thank you so much for your time. And first up, just wanted to understand that there's been a significant surge in Q4 EBITDA and profit. How sustainable is this high rate of growth considering your FY27 guidance? How do you see the growth ahead?
A very good morning. We have been achieving a very good EBITDA margins over the last couple of years. Earlier, the EBITDA margins were in the range of 18 to 20%, and then gradually it has moved to 22. And from last 2 years, we are achieving at around 27%. This year, we have did around 28%. And for the next year, we also believe that we should be able to achieve these EBITDA margins. The reason is quite simple, that over the years, we have invested very heavily in international business as well as defense business. So those sections have started giving a very good results, and that's why we are able to achieve these kind of margins.
Okay, so you're saying that 27% margins are sustainable. Mr. Nawal, morning, Ashesha this side. Now that you're guiding for strong FY27, you've also given 14,000 crore of revenue guidance. Is this on the conservative side, and what will the growth drivers be to be able to achieve this 14,000 crore revenue guidance in FY27?
So we have given a guidance of 14,000 crores, and out of this international business in this year, the coming year, we should be able to cross 5,000 crores, and defense should also cross 4,500 crores. So these are realistic numbers, and our team will work definitely to cross these numbers.
All right, but along with that, the company is also looking at 2,050 crores of capex for FY27. In which segments are you planning to put more money into R&D, and for what use you will be utilizing this amount?
So if you look at our last 5 years of trajectory, we were investing at around 300 crores. Then it has increased to 450 crores, then 750. And last year we have did around 1,500 crores. And for the next year, we have did a plan to invest plus 2,000 crores. So that is the trajectory of our capex plans, or what we have did in the past. And the most of the capex is going towards defense. And that's why defense business is getting better and better over the years. And as far as total spend on R&D is concerned, whatever capex and revenue expenses we are incurring, so R&D is being captured either in capex side or revenue side. But the operative expenses are part of revenue expenses, and the capex side, whatever we are building the R&D capabilities, is being captured in our capex plans.
Right, so 2,050 crores of capex is what you're guiding for FY27. But Mr. Nawal, any sense on the kind of order inflows that you're expecting in FY27, not just FY27, over the next 2 to 3 years, especially from the defense sector? Any major order win that is in the pipeline that you could share with us?
So like I have been sharing that we are focusing on multiple defense programs, and one of them was Pinaka. So we are expecting good orders from Pinaka guided rocket. At the same time, we have also developed plenty of loitering ammunition varieties, and we are also expecting good orders from that section. Apart from this, we have been developing ammunition products in the range of medium caliber and large caliber. So those should also start generating revenues as we move forward. So these are the strategic programs on which we are banking very heavily. Apart from this, like I said in earlier programs, that we are also investing and trying to complete the development program for our Bhargavastra. That should also develop in this year. So these are the trajectory or the variety of products from which we are expecting good revenues to come in for our company.
All right, but along with that, just wanted to have a word on the margins as well. Are there any anticipated pressure on the margins that you foresee, given that the commodity price increases therein? Generally, what is the lag period where you pass on this particular raw material price hike to your customers?
So definitely increase in raw material prices adds pressure, but most of our programs or the contracts with the customers have the escalation formulas, and earlier we were doing it on quarterly basis. Now we are doing off late to the monthly basis, and in some of the cases now it is on 15 days basis. So that should take care of the rise in the commodity prices or raw material prices. So we are quite very much insulated because of these kind of shock. The only challenge is to get the raw material on time. And for that, we have already demonstrated over last many years that despite of all the challenge, we were able to deliver the products, and by utilizing our best supply chain and relationship with our vendors.
Okay, so despite the volatility that we have seen in the raw material prices, you're suggesting that you are able to pass on the impact to your customers on 15-day basis or on monthly basis, and hence 27% margins are sustainable. Are we getting that right?
Yeah, because of escalations, we are passing on to the customers. And apart from that, delivery, unlocking the business which we have built in defense is also helping us a lot.
All right, great to hear about it. But with this, Mr. Nawal, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you very much. Thank you.
All right, but with this, viewers, let's move on and let's talk about the big deal of the day. And ICICI Prudential Life, the stock price is actually lagging in trade on the back of Bharti's life insurance stake. This partnership aims to expand the access to life and health protection solutions across India. My colleague Darshita joins in with more details. Darshita.
Well, yes, Bharti Enterprises and Prudential PLC have announced a major insurance deal, with Prudential acquiring a 75% stake in Bharti Life Insurance for about 4,200 crores. Now, this deal includes an upfront cash payment of 3,500 crores with an additional of 700 crores to be paid subject to certain conditions. The transaction value of Bharti Life Insurance is at around 5,600 crores. Now, this partnership combines Prudential's global insurance expertise with Bharti Enterprises' India presence and is expected to strengthen Bharti's life product offerings and distribution across broker, agents and direct channels. The company are also betting on India's low insurance penetration and rising digital adoption for future growth. However, this development is seen negative for ICICI Prudential Life. Now, Prudential PLC currently owns 22 to 23% stake in ICICI Prudential Life, and as per the regulatory norms, this stake may have to be reduced below 10% after Bharti Life acquisition. Now, Prudential stake in ICICI Prudential Life is estimated to be worth around 17,800 crores, and the possibility of a future stake dilution or the exit is the key overhang for the stock. Meanwhile, Bharti Life Insurance remained loss-making in FY26, reporting a loss of 74.32 crores versus a loss of 36.8 crores in FY25.
Thanks so much, Darshita, for joining us with all those details. But shifting focus to Cochin Shipyard then, the stock is declining on the back of weak set of fourth quarter results. What are the factors ailing the move? Karan is now joining us with all those details. Karan?
Well, Cochin Shipyard is under immense pressure in today's trade on the back of its Q4 earnings. The company has missed its annual top-line growth guidance and reported a 4% growth versus the guidance of 10 to 12% growth. While the revenue is down 16% at 1,400 crores, the EBITDA is up 17% at 300 crores. Moreover, the reported profit is down 4% and stood at 276 crores. The EBITDA margins were at 20.8% level. Now, one may wonder why is the EBITDA up despite the decline in revenue. This is on account of two factors. The first one is the reversal of provisions to the tune of 21 crores. And the second reason is the significant 29% reduction in the subcontracting expenses. The raw material cost as a percentage of revenue, which stood at 40% in Q4 last year, has increased to 48% in Q4 of this year. On that note, do watch out for Cochin Shipyard.
All right, thank you so much, Karan, for highlighting how Cochin Shipyard numbers did flare. But along with that, Power Grid has reported their Q4 numbers. The company did miss the street estimates. Karan, take us through some more number crunching.
Well, yes, Power Grid from the Nifty pack is out with its Q4 earnings, wherein the revenue and EBITDA has missed the street estimates. However, the profit after tax is largely in line with the street expectations. The profit is largely in line with the street estimates considering the deferred tax implications and a higher net movement in regulatory deferral account balances. While the revenue was down 5% year-on-year and stood at 11,600 crores, the EBITDA is down 11% and stood at 9,000 crores. There is a significant contraction in EBITDA margins as well, and it appears that the Q4 EBITDA margins are at a 13-quarter low level. Diving deeper into the business segment, the transmission segment reported a revenue of 10,800 crores. Moreover, the board of directors have approved raising of funds to the tune of 5,000 crores. Remember, the company had shared the following updates in March 2026, whereas on the capex front, the company had already achieved 35,500 crores, and on the capitalization front, the company had already achieved 22,700 crores. Moreover, the company has a planned capex for FY28 to the tune of 82,000 crores. The company has also stated that the power demand in India is expected to more than double by 2047, and the company is looking at 786 gigawatt of renewable capacity target by 2036. Over to you.
Okay, Power Grid in focus on the back of that. Karan, thanks so much for joining us with all those details. But let's shift focus to the banking sector then. Big development in the banking sector. RBL Bank's proposed strategic investment deal with Emirates NBD has moved a step closer to completion. RBL Bank has now received all regulatory and government approvals for the Emirates NBD investment, coming at a time when Prime Minister Narendra Modi, during his UAE visit, highlighted deeper investment ties between India and the UAE and signed multiple bilateral agreements. Ankur is now joining us with more details on this deal. Ankur?
Yes, RBL Bank has received all the approvals for the proposed investment by Emirates NBD, and this comes at a time when Prime Minister Narendra Modi was there in UAE. And as far as the announcement is concerned, it was first announced in October 2025, and ever since, right from Competition Commission to India, Competition Commission of India, Reserve Bank of India, SEBI, all the regulators have given approval, and now the bank is claiming that all the approvals have come in for the deal. Now, if you talk about the preferential issue price, that was at 280 per share, and even open offer was announced as per the requirement because the acquisition was more than 26%. Now, the final shareholding will be somewhere between 51% to 74%, and that is subject to the outcome of the open offer. But all in all, after Prime Minister Narendra Modi's visit to UAE, the bank has now received all the approvals required for the deal, and we may see that Emirates NBD will be holding a majority stake in RBL Bank.
All right, thank you so much, Ankur, for highlighting all those details. But with this, we are completely timed out on this edition of Midcap Masala. It's a goodbye from me and Ashesha and the entire team. Thank you so much for tuning in.